Hey Bowtie Nation, Joseph Hogue with Let's Talk Money, and those of you out there in the nation know we love our stock picks here on the channel, but I always try to share why I'm picking each and what you need to be looking for. Because I do not want this channel to be just me telling you what to buy. That does you no good, right? To be dependent on someone else constantly feeding you those stock picks. I want you to be a better investor. I want you to be able to find those investments that are gonna make you rich. Now that means giving you the tools to pick your own stocks, showing you how to research a stock from start to finish. And for me, that meant studying the curriculum for the Chartered Financial Analyst designation. It meant spending years learning how to dig into these financial statements and analyze a stock. It meant working as a venture capital analyst, creating in-depth cash flow models, industry research, and valuations on companies to find the very best investments. But finding the right stocks to buy doesn't have to be that intense. In fact, in this video, I'm going to show you a simple 5-step strategy to researching and finding the best stocks. We'll look at how to narrow your list to a small group of stocks, and then how to analyze those and how to pick the best for your portfolio. I'll be using the stockcard.io platform in the video, but the process can be used through any investing site or platform. Now, I like StockCard because it takes a lot of these ratios and the research the world talk about and puts it into these easy to understand levels for growth potential, operations, and valuation. I'll leave a link to StockCard in the description below, so check that out. Not only does the platform make stock research easier, but there are some great tools for starting your stock search and getting ideas as well. And as always, you know I gotta send a special shout out to all you out there in the nation. I say it every video, but I do appreciate you being part of the community and just taking a part of your day to be here. If you're not part of that community yet, make sure you tap that subscribe button so you never miss an episode. Let's get started because I want to take you through those 5 steps to research stocks and make sure you're investing only in the very best. I'll show you how to start your stock research with a theme or finding the gaps in your portfolio. Then we'll look at analyzing stocks on 4 key areas: operations, cash and debt fundamentals for that critical survivability, management effectiveness so you know that you're getting the best team driving those companies, and then valuation so you know that you're getting the very best price. And it's all got to start with investing in a theme or just finding those gaps in your portfolio. Nation, do not try to pick the best stocks by looking at the entire 6,000 plus trading on the NASDAQ or the NYSE. That's like trying to take a drink from the fire hose. Instead, you start with an investing theme or a gap to narrow down your list. Now, a theme is going to be groups of stocks around those universal forces and trends that we talk about here on the channel. These are ideas like 5G, artificial intelligence, and an aging population, trends that will shape our future and drive earnings for a specific group of stocks. I love this type of theme investing because it means you don't have to find the best of the best within the group. You're still going to be trying to pick the very best stocks, but that trend, that huge unstoppable economic forces are going to be growing sales and earnings for all the stocks in the group. That means you can be off on your analysis just a little bit and still book some great returns. Now, using the gaps in your portfolio to invest is just as important though. This means looking at your current investments by asset class, by stock sector, maybe even by geography, and making sure that you've got a diversified portfolio. So for example, if you see you've only got stock investments, maybe you look for some of those bond funds or the REITs to give you exposure to those other assets. Maybe if you've got mostly tech stocks, you look for some of those strong companies in other sectors like utilities and consumer staples. And one of my favorite features on StockCard is this featured tab here in the Discover menu. If I click here, it's going to show me stocks in some of those biggest themes, some great ideas to research further like electric vehicles, work from home, and just companies shaping the future. So once I've narrowed down that stock list to a theme or those in a specific group, I can start my analysis by looking at the operational fundamentals. Operations are just how a company is run, how management is turning the product into sales and earnings. So we'll look at things like sales growth, the profitability margins, and profits. And StockCard makes this easy, putting all these into just 2 categories, the sales growth and profitability. Here we see the revenue or the sales growth for Apple over the last year and the 3-year trend. Now there are 2 ways to look at this, and you're going to do a little bit of both. You want to look at that overall number, so for example the percentage sales growth, but also want to look at how it compares to other companies in that sector or the industry. I can also click on profitability here to see that earnings growth, the trend here, and then the gross profit margin for the company. And those of you in the nation know I love these margin ratios, the gross margin, operating margin, and that profit margin. These show you how much the company keeps after sales at 3 different points in that operation funnel, and they're hugely important to finding the best run companies. For example, the gross margin is the percentage of sales left after paying suppliers and gives you a great picture of how much buying power the company has. The operating margin is the percentage left after paying operating costs like staffing, marketing, and administration. This is a great look into management's efficiency and one of my favorite metrics. Finally, the profit margin is that net earnings, the final income percentage of sales, and gives you an idea of the tax efficiency and use of leverage. So after comparing the operations of a company, you move to analyzing the cash and debt fundamentals. Nation, I always use this entire process to research stock, but sometimes different steps become more important than others. For example, during a recession or as we're heading into one, being able to analyze that cash power and the debt of a company is the most important thing you can do to finding those good stocks. Because of course, if those companies have too much debt or not enough cash to withstand whatever the economy brings, they're not going to survive for those long-term returns. So here we're going to be looking at things like debt affordability, the debt to equity ratio, and the current ratio. For debt affordability here, we're looking at how much debt the company has compared to earnings. And technically here we're looking at earnings before interest, taxes, depreciation, and amortization, or EBITDA. And we just want to see that the company is generating enough earnings to cover that overall debt. For the debt to equity ratio, this is the amount of debt compared to investors' interest in the company. So just another way of looking at the amount of leverage the company is using. And this current ratio is a great way to look at that cash survivability of the company. It's the amount of short-term assets, that's cash, short-term investments, and the money owed to the company. Really anything that can be quickly converted into cash against those short-term liabilities, which are all the accounts that the company is going to need to pay within the next year. And we also want to look at management's effectiveness when researching a stock. How well is management running this company? I like the operating margin as a way of doing this, but we've also got that return on assets, the ROA, and the return on invested capital, the ROIC, for how well management is using the company's assets and their investments to create those earnings. And now most platforms are going to do that ROA and the ROIC calculations for you, but return on assets is just the net income. That's their earnings divided by total assets. So how much income is being earned off of the assets each year? This return on invested capital, on the other hand, is just the net operating profit after taxes. You find this by taking the operating income minus taxes, then divided by the amount of invested capital in the company. This is just that long-term debt plus the shareholders' equity. And Nation, I know we're getting a little technical here, which is why it's easier just to use a platform that does these calculations for you. But it's also important just to know these ratios, what they mean, and just how to use them to research your own stocks. Next here, we're going to be looking at the valuation on these stocks just to make sure that you're not overpaying for the shares. And most of you are probably familiar with the price to earnings ratio. That's the price of the shares divided by the earnings per share, just to give you an estimate of how cheap or expensive the stock is. Really though, I like the price to sales and the price to book value multiples much more because they just give you a purer look at the stock's value without all the accounting shenanigans that management plays. Nation, one of the least understood parts of investing is all the tools and the tricks that management uses to make those earnings look better. Sometimes that bottom line earnings per share is all investors look at, and a lot of times it's tied directly to the compensation and the stock bonuses of management. So management has all kinds of tricks that they can use to fudge these numbers. Some legal and some a little shady. In fact, most of my time spent as an analyst was rearranging the financial statements for these tricks, getting the real earnings out of that company and seeing through these shenanigans. But just understand, if you're only looking at that price to earnings number, then you're getting a skewed picture. You want to also look at the price to sales and the price to book value for a stock because these two, that sales and book value, are less easily manipulated by management. I know it's more work than flipping to your favorite investing show or just letting some yahoo in a bow tie tell you what stocks to pick. But Nation, knowing how to research your own stocks will make you more money. You'll be able to pick the best investments for your portfolio and you'll be a better investor. Click on the video to the right for 5 of my favorite penny stocks under $1 per share. 5 stocks that could potentially give you 5 and 10 times your money. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.